A Wall Street analyst just said that advertising for Tesla would be a complete waste of money. This is quite shocking, right? But when we look at his buy ratings for Tesla stock, we see that usually he says buy, he said hold a few times, but as long as you didn't sell and you just kept buying, yeah, you would be doing quite well, especially if you bought all the way back in 2018 and you just kept that stock. It is almost as if this analyst actually understands Tesla a little bit, right? His name is Pierre. Any dollars spent on advertising, he says, by Tesla today would be a waste for everybody, the company, investors, and clients. Spending on advertising is about, number one, growing brand awareness, people knowing about your products, and number two, growing perceived quality, differentiation, and relevance. I feel that his take is going to be controversial among many analysts, especially Wall Street analysts. He continues, Tesla only needs to trigger transactions in this challenging economic environment due to uncertainty with the economy and higher interest rates. And advertising would barely help with that unless we were advertising lower prices. Lowering the prices appears, on the contrary, very efficient. It is well relayed by social media and the press for free. It triggers instant transactions from those potential buyers hesitating and thinking they should take the opportunity. Although, if these price cuts keep happening once every month, you will also have some people hesitating because they will think, oh, maybe I will be able to buy the vehicle even cheaper next month. But if you need the car right now, then you will pull the trigger immediately. And occasionally Tesla still raises prices like it just did with the Model X and S. And those people, if they are hesitating because they believe that prices will go even lower, yeah, that price increase would certainly help them pull the trigger. But then the question is, how much lower should we cut prices? Because if we keep cutting the prices just to get more volume, the margins would be wiped out. And that's a fair question, of course. And Pierre is about to drop a huge bomb right here. Tesla's ambition is to grow volumes by 10 more times from today at 50% year-over-year rate. Wall Street, of course, usually does not believe that Tesla can ever get to that kind of volume. They are only projecting less than 7 million deliveries for 2030. Pierre continues, in a tough year, they should make it a priority without putting at risk the longer-term plan. In other words, lower prices enough to clear all vehicles that Tesla produces, and just make sure that you have enough cash to finance further growth. But many analysts, especially in the auto industry, they do not like profits being postponed. Oh, no, no, no. What are you saying here? Postponing profits? We want deliveries right now. We want higher margins right now. We don't care if it just stops growing. We don't care because that is what we assume anyway. So, yeah. Why do you even try to grow this much? Just keep the prices high and try to have higher margins. Pierre is dropping another bomb right here. Harvesting cash beyond what is needed to finance growth during the hypergrowth phase is worth nearly zero to shareholders, at least to shareholders that actually understand that Tesla is going to keep growing long term and that inevitably, eventually, Tesla will get to about 20 million vehicles per year. Pierre says doing differently would therefore destroy shareholder value. The math is easy. He really gets Tesla, doesn't he? Pierre says one could argue price cuts undermine long-term pricing power and triggers price wars. True, these are in general legitimate concerns, but not for Tesla because no one can compete with Tesla on pricing. Tesla can make, let's say, 3% in operating profit, and then everyone else is losing money. If Tesla just keeps doing that and doesn't stop, everyone else eventually would basically go bankrupt. Bottom line, says Pierre, is that the price cuts are the right thing to do today. Without a shadow of a doubt, actually, he goes that far. Because The price cuts actually create value for shareholders, says Pierre, because it continues the growth and it crushes the competition. Pierre then explains his math. Cutting prices today by $1,000, which is a price cut of about 2% depending on the vehicle, is in essence investing $1,000 to grow future profits. The cut needs to yield $150 in annual incremental profits, which would be a 15% return, i.e. $500 in revenues at 30% incremental margin. In other words, 1% revenue growth to make it worthwhile. This, of course, assumes that Tesla will get back to 30% margins. I think there are many people that think Tesla is not going to get back to 30% margins ever again, and therefore their math would be a little bit different. But you cannot deny the fact that these price cuts seriously obliterate the competition. In the current environment, most want an EV but hesitate because of prices that are unaffordable, and also interest rates are higher. So a $1,000 price cut, says Pierre, almost certainly drives more than 1% incremental sales. We have enough evidence of that. As long as you tap a very large potential market, you must adjust prices down to generate enough demand to fuel the maximal production growth you can deliver, assuming that you do not destroy shareholder value. Every CEO of every growth stage startup knows that. But of course, if you think that Tesla's growth days are behind it, then you will have a different opinion, which explains a lot of Wall Street. Gary Black, on the other hand, completely disagrees with Pierre. He says he isn't distinguishing between a lower price EV, for example, a $25,000 vehicle for the masses, which drives volume growth, versus discounting the Model Y, which pulls volume forward, that would have been purchased anyway. And advertising to drive EV category growth benefits Tesla the most because it has the highest market share, at least in the US. Clearly, Tesla is more than 50% of a total EV market share. But the Model 3 and the Y, I would argue that these two vehicles are actually mass market vehicles. They are not just luxury vehicles. The S and the X are luxury vehicles, but the Model Y and the 3, they may feel like luxury vehicles, and to some degree they are, but I think they can lower the cost a lot more. Giga castings for the front and the rear, and then the structural battery pack, do all of the cost reductions that we already know how to do. We just haven't implemented them yet, and then we will see these costs go down. That will make it basically affordable luxury. In the meantime, to a certain extent, you can certainly call this advertising. Elon going on all of these shows and interviews, I think that helps Tesla. Even though Gary Black really does not like that Tesla is not advertising, he still says that Tesla stock is just too cheap because it's trading at about $165-ish, which makes it a 32 PE ratio if you look at 2024 projected earnings. And when you assume 30 to 35% long-term volume and EPS growth, yeah, that makes it a deal. Near term, though, he thinks that we could see more price cuts in China, which could depress the stock price, but he's very bullish on the Cybertruck and the next generation vehicle. Also, if you look at the Model 3 inventory levels, since the EV incentive has been taken away, well, it still has half of it, but half of it has been taken away. The inventory levels have been creeping up a little bit. If they don't come down, I would expect more price cuts for the Model 3 as well in the US. Should Tesla advertise now that the gross margins are quite a bit lower compared to before? And if you look at Tesla's market share earlier, it clearly has been going down for quite a while, and in China it is well below 20%, including Europe also it is below 20%. Well, actually in Europe for the whole first quarter, Tesla's EV market share is now above 20%. And what is so impressive about that is the EV adoption actually in Europe slowed down in the first quarter. The EV market share went down, but it increased for Tesla. And basically the same thing happened in China as well, although in China, Tesla is still below 20%, but it is quite a bit higher than before. Let me play my favorite kind of advertising for you.
Dude, let me tell you something. That is the coolest vehicle I've ever seen in person in my life. The Cybertruck from Tesla. It's a stamped steel, electric, all off-road vehicle that's bulletproof. It could stop a 45 round. You can raise and lower the height so you can off-road on this thing. It looks like it's 100 years in the future. When you're standing next to it, is absolutely the coolest looking car I've ever seen. Like, you see it in pictures. Have you ever seen it in pictures?
No.
If you see it in pictures, it looks but if you see it in person, you realize how big this thing is. And then you get in it, it's gorgeous. That's what it looks like. When that thing comes out, you can't make enough of these things. These goddamn things are going to be everywhere. Everyone's going to have a bulletproof car. Like, Bill Gates is making a terrible choice. That's what it looks like. When you see it in real life, you just go, holy
What's the movie when they're what's the famous movie?
Look at that thing. Look at the size of the windshield wiper. That's one giant windshield wiper that goes across the whole screen.
It's like a tank,
bro.
But without the big cannons.
And it goes 0 to 60 in 3 seconds.
And it goes out in the. Is it like a it goes over rocks and all of that stuff?
Oh yeah, it's flat because there's no drivetrain. There's no transmission in the center of the car, so the entire car is flat on the bottom. So even if you have an off-road vehicle, you have axles, right?
Yeah.
And these axles, they protrude, they stick down. And so that like messes with your clearance. I went to visit the Gigafactory, and they had it at the Gigafactory, and they had been off-roading in it, so it was all covered in mud. Dude, it's amazing looking.
And it drives itself?
I listen to Joe Rogan's podcast from time to time, and that was a lot of F-bombs. He is quite excited about the Cybertruck, and I guess he's also extremely excited to tell everyone about it because 16 million people listen to his podcasts every single month. Do you think some of them will want to buy Tesla vehicles because he's talking about the Cybertruck? That's free advertising. Tesla, get the Cybertruck out as fast as you can. That's just going to be so much better than any kind of advertising because it generates free advertising. I will discuss my thoughts in great detail about advertising later this week because I don't want to make this video about 20 minutes long. And in the meantime, this is an important message to all Tesla stock investors. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.